G'day folks, welcome back to another update for high-grade copper and US crude oil. Now high-grade copper has hit some resistance and it's retracing back down from there, and US crude is continuing to drift lower, moving into a more bearish outcome. Before you go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook, US crude prices have declined for 4 consecutive days, with Brent crude at $74.59 per barrel and West Texas Intermediate at $70.51 per barrel, amid expectations that a Russia-Ukraine peace agreement could lift supply. US Energy Information Administration, EIA, projects that Brent crude will average $74 per barrel in 2025, decreasing to $66 in 2026 due to increased production and slower demand growth. Additionally, the EIA has slightly raised its US crude oil production forecast for 2025 to 13.59 million barrels per day. High-grade copper prices have risen 6.3% month over month, driven by a weaker US dollar and robust industrial production in China. However, concerns over potential US tariffs have led to increased movement of copper from London Metal Exchange warehouses to COMEX vaults, widening the price spread through the two exchanges. Analysts forecast a 3.7% growth in global demand for 2025, though potential trade tensions pose downside risks. First starting with our US crude oil on the monthly, weekly and daily. We've got the moving averages here, and again these are in the description below should you wish to learn how to draw these on your own charts. So on the monthly, the CCI is just slightly broken below that moving average range, giving us a bearish outlook. You can see there on the price chart, likewise the price is below its respective moving averages, so bearish on the monthly. On the weekly, it's actually breaking down as well below those moving averages. The CCI is still in that moving average range, but it looks like it's going to break down any day now, potentially. The price has already done so ever so slightly on the weekly, so bearish on the weekly. And on the daily, it's actually bounced down from this minor resistance at 79.60, and it's declining further. Now it's actually broken down below the moving averages of the price, and likewise it's been bouncing towards those moving averages, but still bearish on the daily as well, with the price of the CCI below its moving averages. Going to the intraday charts. So if you're trading on the intraday, this is the 1 hour chart. Take the direction of the daily. So we're only going short with trades. So avoid going long so long as this is bearish on the daily. So back here at the moment, you can see there it was bearish at that point. It broke lower, and the way you would have taken that trade is when that CCI breaks below the moving average range and below the price moving averages on that candle. You would have gone in the close of that candle, and you close it out when the CCI breaks into that moving average range. So you would have closed it out there, and that was a 0.5% gain in 10 hours of trade. At the moment it's neutral on the CCI, so don't go long or short. Wait for it to break further to the downside to take short positions. And if you're going to take long positions, wait for the daily to break to the high above those moving averages. So back here, for example, you could have possibly, no, you wouldn't have gone long there because that was still bearish on the daily. You can see where the cursor is still at that point there. Back during this period, that's where that little false break above the daily showed a positive or a bullish move, and that would have been during that little peak of rise there. And that was also a result of this bullish divergence, higher lows on the CCI versus lower lows on the price, and we forecast that to hit this minimum range. And again, for those new to the channel, we look at the Fibonacci from that low. We take it back to the previous high, that significant high, that would have been that area there, and that's at 23.38% retrace. That's the minimum level it reaches. More than 90% of the time it hits that range, and in this case it actually broke right up to the 61% and then pulled back down again. And at the moment, let me just clean it up a bit, I don't see any divergence. In fact, that's a divergence there. If you look at that on the 1 hour chart, that's actually a slightly higher low on the CCI versus a double bottom almost, or a slightly lower low on the price. So that's a bullish divergence ever so slightly. So the way we'd measure that, we'll draw another Fibonacci from that low, take it back to that significant high before the divergence started, and we expect the price to retrace in this 23.38% range as a minimum. It could actually just touch it and then bounce back down again, or it could actually do a few things. Could actually touch it and bounce back down, or actually break right through it. So we don't know yet. We have to play it one day at a time, but at the moment it's neutral on the 1 hour, bearish on the daily. Avoid taking trades at the moment, and just wait for this divergence to play out. I don't trade these divergences. You can, but it's a bit risky. because you don't know where it's going to turn back down. You could actually just touch it and turn back down, so it might not be worth going long at this stage. But I use these, for example, if I was going short during this period, and if you weren't going to close it out when it hit this moving average range, then a divergence should start to give you a warning that, hey, we're going to see a bounce and it could go a lot higher, so just be mindful of that. So for high-grade copper on the monthly, we're bullish. Both the CCI and the price are broken above the moving averages. That's on the monthly. On the weekly, likewise, it's been bullish and still continues to be on both the CCI and the price chart. However, notice on the daily, we've hit this resistance up here at 48,790. It's actually bounced down from there. Now, it's still bullish on the daily price, although notice the CCI is broken into that moving average range, giving us a neutral signal. So avoid going long or short on the intraday until we see this decide where it's going to go. If it's going to go higher or lower, we wait for that to break out of that moving average range. Now, if we go to the intraday chart, again, we use the daily as a reference. So we only go long or short depending on what this does. So at the moment, we're not too sure. And you would avoid taking long or short positions until this decides what it's going to do. But at the moment, you can see here on the hourly, it's broken below the moving averages of both the price and the CCI, and that's giving us a neutral signal as well in that moving average range, and it looks like it's probably going to break further to the downside on the hourly at least. So again, don't trade on the hourly until we see the daily make a decision. Back here we had a bearish divergence, lower highs on the CCI versus high highs on the price. Pull back, this is what I mean by touching that minimum range. It touched it and bounced out of there straight away. And that was a response to the Fibonacci retrace. And you would have gone back to that low there. That's at 23.38% level. So again, avoid trading these if you can. I use them as an exit potential if you haven't already exited, to give you a warning that, hey, once you see this on the CCI versus the price, then just be careful of holding it on for too long, because it could actually break a lot lower. In this case, it bounced out of that range and kept going higher. At the moment, you could argue there's a double top there on the CCI, and that could be that's another area you could look out for. So you can see that it's almost a double top or triple top almost on the CCI. Very flat CCI versus a lot steeper price movement. So again, that's a bearish divergence, and that actually dropped. And if we measure that in a Fibonacci, you can see there it bounced right off that 61%. So again, went right through that 23.38% level. Let me just mark it. So always pay attention to these divergence. In this case, it dropped right through it and bounced off the 61%. Now, we're not sure where it's going to go. Again, we stake it one step at a time to see where it's going to end up. The other thing to notice as well is back here, looking at this, let me just delete that Fibonacci for a moment. But again, just notice whenever you see a very flat CCI movement, that's potentially a warning sign that the CCI is not moving as strong as the price. What you generally want to see, like back here, you want to see the CCI moving with a lot more steep movement, ups and downs. You can see there, like it did with the price. So as soon as you start seeing a flattening here, like it is here, compared to the price, that's a bit of a warning signal that we might see a bit of, it's not exactly a divergence necessarily, but it's a weakening signal. So just be mindful of that as well. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.